Hello everyone, a very warm welcome to this video. I am CA Sagar Shah. To brief about myself, I am currently working with GIC Housing Finance Limited in accounts department. I have a current post-qualification work experience of more than 4 years in accountancy field. First of all, I would like to thank CA Ishwar sir for creating such a wonderful channel for this initiative, for all the professionals to connect with each other, to learn about new things and to collaborate with each other. Thus that this channel now allows each and everyone to would be creating videos on various topics related to the current affairs, related to the CA course or related to any particular topic. So thank you so much Ishwar sir for such a wonderful initiative. And I hope this channel becomes a huge success and gain knowledge from various professionals. This channel gains a lot of subscribers, a lot of professionals, and each and everyone earns a lot from those who are creating the videos, and even those who are creating the videos would learn from all the queries that are received and gets a good opportunity to connect with each other. So being the first video on this channel, I would say that I am neither any expert nor am I any learned person in any particular field. Just like all of you, I am also learning currently. As a chartered accountant, each and every one of you must be aware that having knowledge, having that skills is pretty much important in so many areas, in so many wide areas. So just like all of you, I am also learning. I still have to learn a lot many things. So along with my videos, I hope that the other videos that other professionals would be preparing and uploading on this channel, I would be looking forward to watch all those videos and learn as much as I can to the best possible extent and get all the questions and all the doubts solved from all the professionals. So coming to this video is all about the basics of income tax return. Now, as we all know that income tax return is a very important part of our life, I would say, because every year as an individual, as a professional, we have to file our income tax returns. The due date, as each and every one of you know, is 31st of July for individuals, for resident individuals. So a lot many of the candidates, or I would say a lot many of the professionals, certainly have that question in their mind that which return is applicable to who are supposed to file income tax returns. If any income tax return is applicable to a particular person, what all information is required? Why is that income tax return applicable to that specific person? There are lot many queries that come to each and every one of you where it comes to filing of income tax return and where it comes to knowing that which return would be suitable for which professional. So my endeavor, or I would say my effort through this video, would be to clarify all such doubts regarding what are the various conditions. If it becomes applicable, then the income tax returns would mandatorily be required to be filed by that particular person. Second, what are the different sources of income which is earned and because of which the income tax return is required to be filed. As all of you know, there are 5 main sources of income, including those which are applicable at special rates of tax. So all such queries, all such doubts in the mind which every professional would be having regarding the income tax return, I would be trying to clarify those doubts. But nevertheless, since each and every one of you know that taxation is a vast subject, so it might be possible that I might have missed out something, or there can be something inadvertently missed out, or maybe something incorrect. So though my efforts are that I would be providing you with all the required information and would clarify all your doubts. If any professional has any query regarding any of the contents of the presentation, I would humbly request them to please contact me. I would be giving my email ID towards the end of the presentation. They can contact me, send their queries, and I would be happy to solve each and every query of the professionals who would be asking me. Let's straight away get into the presentation. I believe that the presentation would take around 15 to 20 minutes, not maximum. I will try to cover each and every returns in brief. And first of all, I would be explaining what are the basic conditions which is applicable for filing the income tax returns, what is actually an income tax return, and what are the different types of income tax returns which are applicable to specific individuals if those conditions are satisfied. Okay guys, so let's start with the presentation. As I said, the whole presentation would be on the basics of the income tax return. So what this presentation would be, who all are required to file the income tax return. As you all know that there are various persons under the Income Tax Act defined who are required to file the ITR. And second would be what are the various types or serials of the income tax return that we would be covering after we come to know that who all are required to file the ITR. So let's start straight away with the presentation. Yes, that's me. So first of all, Let's try to understand what are the basic exemption limits applicable to the three types of ages, to the three types of individuals, exceeding which only they are required to file the returns. There are some exceptions as well, which we would be covering at some point at later part of this video. But first of all, let's understand what are the basic exemption limits. So first of all, the income tax returns are mandatorily required to be filed by all the resident assessees, all those people who are resident in India. As you all know that there are two main conditions to be satisfied for a person to be declared as resident in India, which is the first, he should be staying in India for a minimum period of 182 days. And if that is not satisfied, then either he has to stay in India for a period of 60 days in the previous financial year or 365 days in the previous 4 financial years. So these are the two main conditions that are to be satisfied if a person is to be declared as resident in India. And all these residents of India are mandatorily required to file the income tax returns if the following conditions are satisfied. These conditions are regarding the basic exemption limits, regarding the total income which they have earned before applying any deductions under Section 80. So each and every one of you know that Section 80 relates to all those deductions which salaried class or various other classes can avail basis their residential status and basis their sources of income. So before applying any such deductions under Section 80, let's look at the limits. Rupees 2.5 lakhs. This is for a resident who is below 60 years of age. Rupees 3 lakhs for a resident who is between 60 years to 79 years, which we also call as a senior citizen. And rupees 5 lakhs for all those individuals who are above 80 years, which we call super senior citizens. So all those resident Indians who are mandatorily required to file the income tax returns are those whose gross total income, which is before applying any deductions under Section 80, if it is more than rupees 2 lakhs for resident below 60 years, if it is more than rupees 3 lakh for a resident between 60 to 79 years who is a senior citizen, and rupees 5 lakhs for all those who are above 80 years, which is a super senior citizen. So all these three individuals are mandatorily required to file their income tax returns even if their income, the gross total income, is below rupees 5 lakhs. This 5 lakhs is the main exemption limit, which you can call the rebate under Section 87A. If anybody's net taxable income after applying all the deductions under Section 80, the net taxable income is less than or equal to rupees 5 lakh, then they do not have to pay any tax. They get full rebate of the tax, the total tax which becomes payable. So all those individuals need to file the income tax return. Coming to the next part, we'll understand what are the basic conditions. The first was the applicability of the basic exemption limit. The next comes what are the basic conditions which they are required to satisfy for them to mandatorily file the income tax return. There are 4 basic conditions. The first one is that that person should have earned or invested in foreign assets anytime during the financial year. The second condition is if he or she wants to apply for a visa, maybe for a visit to abroad country or maybe settling in the abroad, or if they want to apply for a loan today or in the near future. We all know that if we want to apply for a loan, the main document that any lending institution would demand is last 3 years income tax return. So for that purpose, filing of the ITR becomes mandatory even if the income is below 5 lakh or even below the basic exemption. The third condition is if the assessee is a company or a partnership firm, then irrespective of any income, any losses or any such transactions, they have to mandatorily file the income tax return. Now coming to non-resident Indians or resident but not ordinarily residents, they have to file income tax return if they have earned any income or any income is accrued, that is that income is not yet received, that is receivable in India, and that income exceeds the basic exemption limit of rupees 2.5. And second condition is they are utilizing the benefit of any treaty on any income earned in India. Let's say they are earning any particular income in India and they are earning any particular income in their residence country as well. So it might be possible that that particular income is taxed in India as well as it is taxed in the foreign country. So in case if there is any double taxation avoidance agreement between India and that specific country and the non-resident Indian is taking the benefit of that treaty such that the rate of tax applicable is much below the applicable rate to that particular non-resident Indian, in that case the person should mandatorily file the income tax return. There is no exception to that. The next set of conditions, which is applicable only to resident Indians, these conditions are specifically given through the notification number 37 2022 dated April 2022 by the government of India. If these conditions are applicable or are satisfied in the case of resident Indians, then they need to file the income tax return mandatorily. Let's check what are these conditions. The first condition is if that person has deposited rupees 1 crore or more in one or more of their bank's current account. So basically this, if any resident Indian has opened any current account with any bank, that may be a private sector bank, a public sector bank, a nationalized bank, any bank, and if during the financial year they have deposited rupees 1 crore or more in that bank account, then they have to file the income tax return and they have to show this information in the return. The second condition is regarding the saving banks account. If they have deposited rupees 50 lakhs or more in one or more savings bank account, then they have to file the return. The next condition is if they have incurred at least, that is rupees 2 lakhs or more on foreign travel, whether for themselves or for any other person. That any other person can be anybody. There is no such clarification in the act regarding who those persons are. So taking an example, if suppose I have incurred rupees 2 lakhs for myself and rupees, let's say just 50,000 for any other person, be it my cousin, be it my parents, be it for anybody, then I have to mandatorily file the income tax return, whichever return is applicable to me, basis my status. The next condition is any person who has incurred at least rupees 1 lakh on electricity during the year. So basically all those rich people who are staying in huge flats, who are staying in huge buildings, and they are incurring rupees 1 lakh or more during the financial year on electricity expenses, they have to mandatorily file the income tax return. This is a very important condition which lot many people get confused. So it says that TDS, which is tax deducted at source or tax collected at source, exceeds rupees 25,000 on income from other sources or income taxable at special rates in the financial year. So let's say that there is a salaried person. As per section 192B, the employer already deducts TDS on his salary income if it exceeds these 5 lakhs in the financial year. But that is not what this condition says. This condition says that whether or not the TDS on salary is getting deducted or not. If TDS or TCS is being deducted at rupees 25,000 or more on any other source of income, be it any income on fixed deposit, then be it income on any other investments, be it income on any gold, and it can be any income as such. And income taxable as special rate. So basically any winnings from betting, gambling, lottery, etc., horse races and all. If the total tax deducted at source exceeds rupees 25,000 on all such income, that person has to mandatorily file income tax return even if the total income does not exceed rupees 5 lakh, which is the basic, which is the threshold limit above which the tax starts getting deducted and tax has to be paid at the applicable rate. The next condition is for a business as a whole. If their total sales, turnover or gross receipts, which simply means the total income, gross income earned during the financial year is more than rupees 60 lakh, then they have to file the applicable ITR. Next is for professionals. If the gross receipts of these professionals is rupees 10 lakhs or more during the financial year, they have to file the return. Now take some examples of what is the business and what are these professionals. So the examples of business can be anything: metals, trading, manufacturing, textile, carpenter, even painters. All these are examples of businesses whose if turnover exceeds rupees 60 lakh during the year, they have to file the return. And professionals, as we all know, they can be CAs, company secretaries, chartered accountants, lawyers, advocates, doctors, architects, basically all those who are specialized persons who need a specific degree to either practice or to provide services to the industry. So if their total receipts exceed rupees 10 lakh during the year, they have to file the income tax return. After understanding first the basic exemption limit applicable for filing the return and the special conditions if applicable, now let us understand what are the various income tax returns which are applicable and which various individuals or companies or partnership firms need to file. So there are 7 types of income tax returns. Which return is applicable to which specific individual? That depends on 3 main conditions. The first condition is what is the type of the assessee. As I said, he can be an individual, he can be a partnership firm, he can be a company, he can be an artificial juridical person, etc. The second main condition applicable is what are the various sources of income that the person is earning. And the third main condition is what is the residential status of that person. This can be in the case of individuals as well as companies. It can be a resident individual, non-resident individual, a domestic company, a foreign company, so on and so forth. So the applicability of the type of the income tax return depends on these three main conditions. Let's come to ITR 1, which is also called as Sahaj. This is because this ITR is a simple one or a two-pager ITR, wherein only few required information or sources of income is required to be entered. And this particular ITR is only for resident individuals. No other person, I repeat, no other person or individual can file ITR 1. ITR 1 will be filed by only resident individuals who have earned income only from the following sources. So, if any resident individual earns from these particular sources only, they have to straight away file ITR 1 without any doubt. Now, what are the sources of income? Here we go. First is pension or salary. Second is any income, which you can say any rent from a single house property. Only one house property which he is either owning or he has given it on lease. Third is any agricultural income not more than rupees 5,000. Anyways, agricultural income is exempt. Or even if that person is earning any income, that would anyways be taxable. Still, this is a condition that if he has any agricultural income more than rupees 5,000, he has to file ITR 1. Next is betting, gambling, horse racing. दो नंबर का if any person is earning any income from these illegal activities, you require to file ITR 1. And the total of all four of this income, which is pension and salary, single house property, agricultural income not more than 5,000, and betting app, the total income from all these sources does not exceed rupees 50 lakh. I repeat, does not exceed rupees 50 lakh. Then that particular individual has to file ITR 1, which is also called as Sahaj. Now a question might arise, then who are those persons who are not required to file ITR 1? Here we go. The first person is any person who is having income from capital gains, or they have suffered any losses, or any person engaged in any business or profession. These individuals are not allowed to file ITR 1. And the last is any person who is having any income from any investments in foreign assets. Even they do not have to file ITR 1. They have to file ITR 2, which we will be covering next. The next person is any director of a company. So any person who is a director in a company, they are not required to file ITR 1. And the last condition is all non-resident Indians or not ordinarily resident Indians. They are not required to file ITR 1. They are required to file the applicable ITR basis, as I said, those three main conditions. So all those resident individuals who are having income not more than rupees 50 lakhs from all those four sources, they have to compulsorily file ITR 1. Of course, that condition remains that their basic exemption limit should be more than rupees 2.5 lakh or 3 lakh or 5 lakh as the case may be. And the total income should be earned in India. And those who cannot or not allowed to file ITR 1, as I said, those people who are having capital gains from business, capital gains, those who are engaged in business or profession, and those who are having any investments in foreign assets. Then any director of a company and any non-resident Indian or not ordinarily resident Indians are not required to file ITR 1. So who all are required to file ITR 2? Those are resident individuals, non-resident individuals, a Hindu undivided family, and a director of a company. These four individuals need to file ITR 2. Now, when are they required to file ITR 2? Only if they are earning income from the following sources. First of all, you need to understand that their total income should exceed rupees 50 lakhs in the financial year. All those individuals, only resident individuals who are earning income up to 50 lakh, they have to file ITR 1. But all those individuals, as I have mentioned above, if they are earning more than rupees 50 lakhs in a financial year, they have to straight away file ITR 2. And when are they required to file ITR 2? When they are having income from salary and or pension, when they are having income from more than one house property. So anybody having up to one house property, they are required to file ITR 1. Anybody having more than one house property and earning income from that, they have to file ITR 2. They are having income from interest on deposits, betting, gambling, races. So any income from investments and illegal activities, they have to file ITR 2. Agricultural income exceeding rupees 5,000. We can clearly differentiate between who are required to file ITR 1 and ITR 2. Anybody earning agricultural income more than rupees 5,000, they have to file ITR 2. And those who are earning less than rupees 5,000, they have to file ITR 1. The next is anybody having capital gains or losses and investments in unlisted equity shares. So capital gains or losses at any, they have invested in any unlisted equity shares of any company, they have to also file ITR 2. And I precisely remember that in ITR 2, we have to provide all this information in a separate page. where they have asked for this information. And this is the most important condition and a very recent condition that has been implemented. Any income generated from any foreign assets or cryptocurrencies, which is nothing but virtual digital assets. In ITR2, there is a special sheet wherein you have to specifically mention all the information and all the income which you have earned from crypto trading, which is nothing but virtual digital assets. And any income from investments in foreign assets, they have to file ITR. The main condition now who are not required to file ITR2, simple. Any person engaged in business or profession, they are not supposed to file ITR. So we can clearly distinguish between those who are required to file ITR1 and those who are required to file ITR2. Any person who is engaged in business and profession, they are not supposed to file ITR. This will be covered at the later part of this video. Coming to ITR 3, all those people who are engaged in business or profession, they are not allowed to file ITR 2. They are actually allowed to file ITR 3. They have to satisfy the following basic conditions, which is, as I said, they are specifically engaged in business or profession. And as I said earlier, business, there are maybe few examples can be textile, manufacturing, trading, carpenter, etc. And professionals can be chartered accountants, company secretaries, lawyers, advocates, etc. The second condition is that they have to make any investments. I won't say have to, they have made any investments in unlisted equity shares in any company during the financial year. And the third main condition is they are a director of a company or a partner in any partnership firm. So as I mentioned earlier, any director of a company is not required to file ITR 1, neither required to file ITR 2. They have to straight away file ITR 3, and only those who are engaged in any business or profession. If any director of a company is earning salary or earning income from investments, they have to file ITR 2. But any director of a company or partner in any partnership firm who is engaged specifically in any business or profession, they are earning income from any business or profession, they have to file ITR 3 and not ITR 2. Now, as I said, assessee, that is any individual, and HUF who are specifically engaged in a profession or business, they can have income from other sources. That is basically from investments, from foreign assets, capital gains, etc. But they have to specifically file ITR 3 if they are engaged in business or profession, as I said. I hope this is pretty much clear. Now coming to ITR 4. This is specially for all those who are engaged in presumptive scheme. Now a question may arise, what is presumptive scheme? Chartered accountants would most probably be knowing what is presumptive scheme, but in case anybody who does not know about the presumptive scheme, let's understand what it is. So basically ITR 4 will be filed by resident individuals, into undivided family and partnership firms who are engaged in presumptive scheme, which basically consists of three main sections. Section 44 AD, Section 44 ADA and Section 44 AE. Section 44 AD applies to all businesses who have gross receipts during the financial year up to rupees 3 crore with effect from this financial year, which is 2023-24, and before that it was rupees 2 crores in a financial year. 44 ATA is for all the professionals having gross receipts up to rupees 75 lakhs from this financial year, and it was rupees 50 lakhs up to financial year 2022-23. And Section 44 AE is for all those who are engaged in the business of leasing, operating or hiring goods carriage. So basically you can say all those transport agents, transport companies which are engaged in this business and they are owning less than 10 goods carriages during the financial year at any time. So that means in any financial year, if they have started owning more than 10 goods carriages, then they cannot opt for presumptive scheme. They have to opt for the normal taxation scheme, which is applicable to them basis their residential status and basis their type of organization. So this is the presumptive scheme. This ITR 4 is applicable only to these three assessees, and only if they have opted for presumptive scheme, provided they are satisfying the mentioned threshold limits for the gross receipts. So basically what they have to do is that they have to declare either 6% of their total income as profit if they are having income from digital mode, or they have to declare 8% of the total income as the profit if they are having income from cash or any other sources, and accordingly pay tax at the applicable rates. So this is the presumptive scheme all about. It's nothing but, first of all, they have to see that whether their gross receipts are up to rupees 3 crore in the case of a business, or are up to rupees 75 lakh in the case of professionals. If yes, they have to specifically apply to the income tax department for opting for this. And at the end of the financial year, in the income tax return, they have to declare 6% or 8% as the case may be of their total income as profit, and accordingly pay tax at the applicable rate. As I said, basis their residential status or basis their type of assessment. The next three ITRs which probably would be the last part of this discussion. The first of them is ITR 5, which is applicable to some specialized assessees, I would say, who are not covered under ITR 1 to ITR 4. Now, who are these? They are artificial juridical persons, business trust, association of persons, body of individuals, partnership firms, and limited liability partnerships. All these assessees, except companies, I'm repeating, except companies, all these assessees which I've mentioned, they have to compulsorily file ITR 5. And obviously, all those partnership firms who are having gross receipts more than rupees 3 crore will also file ITR 5 and not ITR 4. Those who are having less than rupees 3 crore, they will file ITR 4 under presumptive scheme. And all those who are having gross receipts. Coming to ITR 6, this is specifically for only companies. ITR 1 to ITR 5 are covering all the assesses except companies. ITR 6 is specifically for companies, which can be a domestic company as well as a foreign company, who are registered under the Companies Act 2013. But the only condition is that they should not be registered for any religious or charitable purpose under Section 11 of the Income Tax Act, which is basically those companies who are availing the benefits of charitable organizations. So all private limited companies, public sector companies, public companies, listed companies, any type of companies, and also foreign companies, they are required to file ITR 6 who are specifically registered under the Companies Act. Now, foreign company who are earning income in India, they will also have to file ITR 6 provided they do not satisfy any exemptions under Section 115A5. Now, since this video is specifically about the basics of ITR, I'm not going into deep about what are this exemption under Section 115A5 that you can certainly get from by referring the Act. But this is just a condition for a foreign company if they are earning any income in India, but those sources of income are under any one of those which are mentioned under Section 115A5, then they are exempted from filing ITR 6. They do not have to file ITR 6. I'll try to cover all these exemptions under Section 115A5 if it is feasible. The last ITR, which is ITR 7, applies to all those individuals, all those trusts, associations who are engaged in religious activities. So, dharmic and astic law, those who are doing good for the society, those who are earning some good, who are doing good deeds, they have to file ITR 7. So, religious trusts, including companies who are formed for religious purpose, charitable trusts, they can file ITR 7. Then political parties, medical institutions, which is basically our hospitals, clinics, they have to file ITR 7. Then schools, colleges, educational institutions, which would cover your classes or coaching classes and all, they would be required to file ITR 7. News agencies and those companies or those individuals who are engaged in scientific research, specifically for scientific research, they would also be required to file ITR 7. And then universities, they are basically covered under Section 139 4A, 4B, 4C, and 4D of the Income Tax Act. So this is all about what ITR is applicable to which type of assessee and what is the residential status of that specific assessee. We have to check all these conditions, all these sources of income, and accordingly we have to decide which ITR is applicable to which assessee. That's all guys from me. I hope I have been clear. This was my first video, so there might be that I might have missed out something or I might have inadvertently made some error somewhere. If you notice anything, then you can please let me know, which would help me to also rectify my errors and rectify my know-how. In case anybody has any questions regarding the applicability of ITR, the applicability of the basic conditions or the threshold income, they can feel free to reach out to me. I have given my email address below, which is sagarsha9000@gmail.com. They can reach out to me with their queries and I'll be happy to solve each and every query. So thank you so much guys for listening to me. I hope I have been helpful in clarifying all the doubts, and in case of any errors or misspellings, I apologize to each and every. So thank you once again.